the survey says that the industry had a very good 2015. So gross written premiums increased by 11%, which is definitely more than inflation and the growth in the economy overall. I think the challenge remains still that there's not necessarily the same increase in the policy count that we're seeing. So the gross written premium is largely driven by risk premium increases as opposed to real new insureds coming on board. And I think that remains a challenge for the industry, and that's why a conference like this is all about innovation and business unusual. And I think that is the right message for the industry to have, to say, let's find new ways of getting new products out there. So I think they all look towards some form of a digital strategy, and that means different things to different insurers depending on where on the spectrum you are. If you are a direct insurer, you may use a digital strategy to get more into the commercial space. If you are an intermediary supported insurer, you may use a digital strategy to get to retail customers and giving them more information and easier access to you as an insurer. So that's definitely the one obvious thing, and that the industry is well advanced down that track. But then there's many other things like joint ventures that I think we're going to see, insure tech. This industry is truly resilient. So look, there's the broad two parts of it. There's the prudential part, the capital part, which is in SAM. And maybe let me just deal with the two parts first. So there'll be the prudential part, and then there's the market conduct part. So regarding the SAM, the capital part, I think the industry is ready for that. It's been delayed a year. It will now be implemented, and I think people say, let's do it. Let's get it done. I think the conduct side is a little bit more uncertain, and what it really will mean for the industry needs to crystallize over the next year. So I think that brings about uncertainty, and it's difficult to manage your business model with uncertainty. So it'll be good. I know the FSB said there will be a significant installment of RDR coming in early next year, and I think the industry, on the one hand, it may hamper certain practices, but also give them certainty. So we actually asked insurers that question, and the general view is that the premiums are not going to be double-digit growth. So they've estimated between 5% and 7%. I wonder if that's a little bit conservative. So one would hope that the industry can at least get to a 7% growth in gross written premiums. The loss ratios are, for the year to date, are also a little bit tapered down from last year, but it is only 6 months into 2016. So let's hope for a more benign back end of 2016.